Welcome to the Shikama Live Show with your host, Shikama. China stocks surge as GDP triggers expectation of Beijing stimulus. Be sure to subscribe and like the video. China shares turned higher Tuesday as investors weighed the likelihood of further stimulus from Beijing following data that the economy grew at its slowest pace in a quarter of a century. The Shanghai Composite Index, SHComp, is up by 2.97%, traded up 2.8% after flitting near the flat line. And Australia's S&P ASX 200 XJO is up by 0.91%, climbed 0.9%. Japan's Nikkei stock average, NIK, is up by 0.55%, closed up by 0.6%, and South Korea's Kospi, SEU, is up by 0.60%, rose by 0.6%. The region's market were reacting to the latest batch of data from the world's second largest economy. Growth slowed to 6.9% in 2015 compared to 7.3% in 2014. China also expanded by an annualized 6.8% during the fourth quarter alone, shy of 6.9% expected by economists surveyed by the Wall Street Journal. Quote, "It does suggest that more stimulus from authorities may be needed to push forth the pace of expansion," said Niv Dagan, executive director, Peak Asset Management. Quote, "Investors are happy to take a backward step and increase their cash weighing until things stabilize," end quote. Investors have been reluctant to buy up the region's shares, remaining nervous about how China's authorities will guide their market and lower oil prices. Doubt lingers about the ability of China's central bank to curb yuan speculation, which was the initial trigger for selling in-market worldwide earlier this year. China's Shanghai Composite Index, which has fallen nearly 17% this year, has dragged markets in Japan and Australia near bear market territory, defined as a 20% fall or more from a recent high. Efforts by authorities to talk up the underlying health of the Chinese economy this weekend may have helped calm some fears among investors and encourage them to return to markets, said Angus Nicholson, market analyst at IG. Quote, "Chinese markets have already suffered such a dramatic correction this year that I think some of these official assurances have helped bring a few buyers back to the table," he said. Overnight, the Stoxx Europe 600 SXXP is down by 0.36%, closed down 0.4% after swinging between small gains and losses throughout the day. U.S. stock markets were closed for a public holiday, leaving trade lighter in Europe. On Tuesday, the Shanghai Composite Index was adding to its gain of 0.4% on Monday. Still, analysts say the recent rally remains tentative. The morning's figure included Chinese industrial production, fixed asset investment, and retail sales in December, all of which slightly missed economists' expectation. Industrial production, a rough proxy for economic growth, rose 5.9% in December from a year earlier, slowing from 6.2% growth in November. The median growth estimate was 6.0%. Quote, "Overall, we see it as a miss," added Dagan. Economists still expect further weakening for China's economy, with Goldman Sachs estimated growth of 5.8% in the first quarter. The Australian dollar, AUD-USD, is up by 0.5094%, was down 0.2% at $0.6847. The Hong Kong dollar fell a fresh 4-year low of HK $7.8027 to $1. The local dollar has weakened for the fourth session in a row amid worries that the city's economy could weaken as China's does. At last, traded at HK $7.8017 to $1, roughly unchanged from late Monday. Brent LCOH6 is up by $1.89%. The global oil benchmark fell to a fresh 12-year low of US $27.70 a barrel overnight as investors absorb the news that sanctions have been lifted against Iran, which can again trade oil on international markets. Prices were last up 2.2% at $29.19. Gold prices, GCG6, is down by 0.17%, slipped by 0.2% at $1,000.88.80 a troy ounce. Thank you for watching the Shikama Live Show.